Congress and the White House are trying to jumpstart the economy. The stimulus package involves spending hundreds of billions of dollars to help two kinds of banks. First, there are the big banks that have these toxic loans, the bad loans on their books. Then there are the small banks that are healthy, but they're trying to grow. But will all of this help you get a loan so you can buy a house? To get some answers, we went to a local community bank to find out. Hi everybody, welcome to Ledger Live. We're here today in Westwood in northeastern Bergen County at Pascack Community Bank. We want to try to find out something about this economic stimulus package and how it's going to affect people. So we're going to go straight to the top and talk to the bank's president. All right, we're here with Bruce Meisel, the president of Pascack Community Bank, and we want to ask him a couple of questions about the Troubled Asset Relief Program, also known as TARP, and what that means to the average consumer. Bruce, thanks for joining us here on Ledger Live and
my pleasure.
Taking your time out to explain this to us. Can you tell us just very simply what this program means to your average customers?
The focus of the program is to provide more increased ability, enhanced ability of banks to lend money. Certain of the larger money center banks who have already sustained substantial losses, they needed capital in order to essentially recapitalize their bank for loans that were previously made and went bad.
Right, they had bad loans, and that's what they had to do to take care of those loans.
That's correct.
But you didn't have the same situation.
No.
Community banks like yours, you didn't have problem loans. But
No.
You got money. How much did you get, by the way?
We got $3,756,000.
Okay, you got $3.7 million.
Yes.
What are you going to do with that money? Are you going to provide loans? Are you going to expand, or what?
That money, we presently have approximately, with that money, about a $20 million capitalization. So that money goes into capital. And why that's important, the classification is extremely important, because what it means is that if we take $4 million additional money in as capital, to use round numbers, it increases our ability to lend money into the community exponentially. And what that means in simple arithmetic terms is that if we have $4 million of new capital, which is what the TARP money is categorized as, that means that we can lend out an additional $57 million into the community that we wouldn't have had to lend out before. If for every dollar of capital, it enables you to lend out a multiple of that for loans. We had 3 branches at the end of 2008. By the end of 2009, we'll have 6 branches. So we're going to be doubling our size.
So you can take a $4 million loan and loan 10 times that much.
That's correct.
Out by getting that money, and that's why it's important.
That's the whole key. It's the
and it
the
helps
exponential.
Small businesses. It helps consumers.
Consumers. It helps everybody.
Part of the reason why we're in this credit freeze is that these loans, these bad loans, were bundled into
Yes.
something called collateralized debt obligations.
Yes.
So they took loans and put them into a security, almost like a bond or a stock.
A stock, right?
It's like a stock.
That's what they did.
And now nobody wants these things. Right? They're like a bad used car in a sense, right? How do we get out of that situation? Because that seems to be paralyzing a lot of these bigger banks.
You're exactly right. And what happened is, and this is why there was a disconnect, because once you take these bunch of loans and you package them up in a bundle, and then you give them out, and Lehman Brothers was the big market maker in those. So when Lehman Brothers went under, the market for a lot of these securities got frozen. And that was the beginning of this cycle. Letting Lehman go was a real problem, at least from that market aspect. But the securitization of these loans is really a problem because
turning the loans into securities.
Sure, because they sell them to you and to you and to you. The problem is, once the loans are sold to the 3 of you, it becomes your problem to make sure the loans get repaid. Mm-hmm. The bank that originated the loan, or the mortgage company that eliminated the loan, at that moment became divorced from having an interest as to whether or not the loans get repaid. In our situation, we expect our loans to get repaid. We value the credit. That's the hard part. Mm-hmm. If I had to look at giving you a mortgage and I didn't have to worry about you repaying, it's a no-brainer. Mm-hmm. What do I care? Because I make my money when I bundle these things together and sell them into the marketplace. And allegedly, those collateralized mortgage securities were insured. But the insurance companies that were insuring them were getting paid by the bundlers. So they probably may have lost a little bit of their objectivity.
Yes.
So the whole system, I don't want to use, became a little polluted at every step.
Mm-hmm.
And every time there was a little pollution, eventually it filled up the
That's
sewer.
why they're called toxic assets,
And
toxic
that's
loans.
really good.
A lot of people who have been making their payments on their loans, they're doing the right thing, they didn't buy a really expensive home, they stayed within their means, they feel this is unfair that the government is planning to buy some of these toxic assets, or at least that's one of the proposals out there, because they're saying, look, hey, we don't have a chance to refinance our house.
Nobody gave us a deposit.
Exactly,
Yeah.
exactly. So there seems to be some disconnect there, and we're rewarding bad behavior by both consumers and lenders, aren't we?
I'm not going to tell you you're wrong on that.
Okay, final question.
Yes.
If you could send a message to Pennsylvania Avenue and tell them what's happening on Broad Street in Westwood or Broadway, what would you tell them?
Before they enact any of these sweeping bills, have testimony and invite everybody down who's got their finger on the pulse of what's going on. Invite the local appliance company. Invite the local bankers who know what's going on in the community. Invite homeowners down. Listen to everybody, because you can only learn from those people, from your viewers, from people like myself who run the local institutions, the local retailers. We have our hands on the pulse of what's going on.
Okay, Bruce, thanks so much for being on Ledger Live.
My
Appreciate
pleasure. I hope I was helpful.
it. You are. Okay, well, there you have it. Some good answers to a very complex question. And that's a wrap on this edition of Ledger Live. Remember, you can catch us at Ledger Live, at starledger.com, and also at NJ.com. Until next time, take care, everybody.